Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The US launches another wave of strikes on Iran as President Trump vows to make Tehran pay for the deaths of US troops. But oil holds steady as mediators continue to seek de-escalation. A surprise choice for Chancellor as former Defense Secretary John Healey heads for the Treasury. The new UK government pledging more support for the cost of living. And expectations for increased defence spending take centre stage at the Farnborough Air Show. We'll be speaking to industry leaders throughout the day. Well, a very good morning. Welcome to Tuesday. We've got geopolitics, politics and tariff news in the mix today. But for equities, the focus is firmly on tech. Asian stocks up for the first time in 4 days as investors buy back into chips. So the MSCI Asia Pacific Index up 2.2%, boosted by the likes of the Kospi up 4%. There we also have futures up stateside, the chip bid feeding through, but we're looking towards a lower start here in Europe. Less exposure to tech, of course, but does this picture change by the time of the open? Euro Stoxx 50 futures down 0.2%. Now, flip cross asset, and you can see what's supporting stocks as well this morning is also a drop in oil prices after this 2-day gain as traders weigh up the Middle East outlook. You've got Brent trading here at $88.56 a barrel. Goldman saying it could top $120 a barrel if the Hormuz disruptions persist, though. Yields steady on the 10-year at 4.59, and we're keeping an eye on the pound, aren't we, given all of the politics, holding on to its declines from yesterday's session, just up a touch at $1.34. Of course, we had markets surprised by the new Prime Minister Andy Burnham's choice of Chancellor, and Gilts selling off on Burnham, saying that he'd seek flexibility on the fiscal rules. So let's see how UK assets hold up as he floods the zone with policy announcements over the coming days. Now let's take a look at the other risk events on the agenda for today. At 7 a.m. London time, it's the latest UK jobs and public borrowing numbers. The jobs numbers expected to reinforce the BOE's view that no hikes needed for the time being, and the public borrowing numbers setting the scene really for the fiscal squeeze on Burnham's government. Then at 9 a.m. London time, we get the ECB bank lending survey, which of course could show that both the supply of and demand for credit have declined since the start of the Iran war. And then at 10 a.m, we'll have another read on the German economy with the ZEW survey. So plenty ahead. Let's get you set up for your Tuesday. We begin with breaking second quarter earnings out of the Swiss pharma industry. These from Novartis. The expectation was that it would reiterate its full year outlook. What we are seeing is that it has reported core earnings per share for the second quarter that beat the average analyst estimate. So $2.41 per share. The estimate was for $2.16. The CEO saying that they remain on track to deliver their outlook. The 2026 full year guidance is indeed reaffirmed, and so a positive set of numbers, it would seem, from a first glance from Novartis, and we'll get full analysis of those numbers later on in the show. Now let's take a look at broader markets. Asian stocks moving higher overnight, boosted, as I say, by the closely watched chip sector. And Winnie Xu has got an update for us from Hong Kong. Winnie, what should we be focused on this morning?
Yeah, good morning, Lizzie. A very nice rebound that we are seeing in Asian stocks today, with the MSCI Asia here up 2.3% following 3 days of tech-led declines, and in fact having its best day in about a month. Now we have Japan coming back from its holiday, and the Nikkei 225 also up nearly 3% after entering that technical correction territory just last week. But leading gains today, we have South Korea's Kospi index here up about 4%. Now we are seeing today foreigners buying while retail investors sell. Now that foreign investors inflow is also helping South Korean won here strengthening against the US dollar, and in fact it is Asia's best performing currency so far this month. Also coming back of that tailwind we saw this morning from the trade data, we are seeing export numbers up about 63% for July through the July 20th, and that is a record compared to any of their years for the same period of of time, supported by that strong AI demand. Now, Flipboard, we take a look at another bright spot, which is in the onshore Chinese stocks. We are seeing gauges here, CSI 300 also up to more than 2%, extending gains from yesterday as Beijing continued to ramp up its support to stabilize the market. And that is also being helped alongside the so-called national team, as well as the insurers and the state-backed funds. Now, another bright spot we are seeing is in the tech space, because we have a Chinese AI model maker, Zhipu, saying that the company has completed the construction of a data center used only local chips. So you are seeing shares there, as well as the local chip makers surging on that front. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Su in Hong Kong. Now, turning to the geopolitics, the US says that it's completed a 10th day of strikes on Iran after President Trump promised Tehran would pay for the killing of 3 US soldiers. But the conflict could yet expand further, with Iranian-backed Houthi militants threatening to blockade Saudi Arabian shipping in the Red Sea. Let's get the latest now with Bloomberg's Middle East breaking news editor Patrick Sykes. Good morning, Patrick. How does the threat from the Houthis then change the situation? How much oil is at stake here?
Yeah, it's millions of barrels a day, right? Saudi Arabia had been relying on that alternative route when the Strait of Hormuz became closed. It moved to shipping those barrels to the Red Sea coast as an alternative, and that is the route that's now under threat. In particular, for now, of course, focused on Saudi Arabia. But I think the fact that the Houthis started with this very country-specific restriction, as they would call it, also points to the idea that they could, escalate it further and apply it to other countries' exports in future. But Saudi Arabia being the closest to them, and I think the most prominent in terms of that Plan B supply chain, was the one they went for first.
And Iran says, Patrick, that it's still in contact with mediators on proposals to ease the hostilities. How real is the possibility of de-escalation now, given the comments we just mentioned from President Trump?
Yeah, yesterday, despite all of the recent the escalation over the past week or so, yesterday we did see these small signs of movement on the diplomacy, albeit before the announcement by the Houthis of that naval blockade. But we do know that that some of the mediators, we assume among them certainly Pakistan, maybe also Qatar, have been proposing to Iran that they get back around the table. Perhaps a 10-day ceasefire has also been mentioned. We also know that Iran's interior minister, who's previously been involved in shuttling between capitals on the issue of the war, was dispatched yesterday to Pakistan, ostensibly to discuss bilateral issues. But I think everyone expects that those talks would also cover the war. So it does seem that there's some kind of movement, but it's worth bearing in mind that the thing they're aiming for right now is simply a very brief ceasefire. It's not even as ambitious as returning to the status quo at the time of the MOU back in June, let alone looking for a more permanent resolution to the conflict and the underlying reasons. So very modest expectations, and for now, even that appearing elusive.
OK, Patrick, thank you very much. That's Bloomberg Middle East breaking news editor Patrick Sykes. Now, turning to the UK, because we are going to be keeping a firm eye on gilts at the open after yields rose on comments from UK Prime Minister Andy Burnham saying that he's looking for flexibility in the fiscal rules. The new Chancellor, John Healey, later described fiscal credibility as the bedrock for economic stability after his appointment. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, good morning. So I do wonder whether Healey's appointment is enough to calm the market. He's being presented to us as a safe pair of hands with Treasury experience to boot.
Morning, Lizzie. I don't think gilts are out of the woods yet. Yes, Healey is a well-known name in Treasury circles. He was a junior finance secretary back in the days of Gordon Brown's cabinet. So he knows how the fiscal rules work, and he also vowed allegiance to the fiscal. He said fiscal rules, saying that fiscal control is the first operator for for any chancellor, and that he will certainly hew to that. But even at the same breath, he also mentioned that he will meet increased defence commitments, the UK's increased defence commitments to its international allies. So on the one hand, he says that fiscal supremacy is what matters, but on the other hand, he says that he wants to increase defence spending. Investors will need to see how that plays out. And because he's a seasoned campaigner in the finance chambers, I don't think we are in a situation where it's going to be a repeat of the Liz Truss episode. But all the same, we've got an experienced pilot in the cockpit. Whether or not that means a turbulent ride, only time will tell.
I'm sure the ex-Defense Secretary will enjoy that analogy. Ven, I'm just seeing lines crossing the terminal saying that the UK government is going to remove VAT from electricity bills from the 1st of October. Of course, we're expecting an announcement on cost of living support today. I wonder how much leeway the bond vigilantes are going to give this Burnham government when it comes to cost of living support, but also more broadly when it comes to spending. How much gilt nervousness do you expect this week and beyond?
Oh, there is going to be a fair bit of gilt nervousness, Lizzie, because if you look at the 10-year yield, we popped above 5% yesterday. Now, 5% we have seen briefly earlier this year. But really, it was routine occurrence only before the global financial crisis. So a 5% yield is pretty significant. How significant is it? Now, if you fully swap out the gilt cash flows into, say, the euro, you will get a comparable yield of 3.4%. That is fully 25 basis points above what you get on 10-year German bonds. So that is a price discount that investors have slapped on gilts, and that shows that investors are not a willing partner if the government starts experimenting with its fiscal rules.
OK, well, we're not seeing a discernible move in the pound off the back of this announcement, Ven, but the statement from the government saying that any further action, including on funding for longer-term measures, will be taken at the budget alongside an OBR forecast, the Office for Budget Responsibility. All decisions at that point will continue to be funded and also consistent with the government's fiscal rules. For now, Ven Ram, Bloomberg MLive strategist, appreciate your analysis this morning. And we're going to talk a lot more about UK politics later on in the programme. Still ahead, we'll head live to the Farnborough Air Show to look ahead to our interviews throughout the day as defence spending takes centre stage. But first, the Trump administration threatens new 50% tariffs on Canadian imports. So we'll get you all the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Turning to the tariff story now, the US says that it'll impose a fresh 50% levy on some Canadian goods, alleging that Canada has been treating American cars, alcohol and dairy unfairly. The duties are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against the US's second largest trading partner. Let's get some analysis now. We can speak to Bloomberg's Rosalind Matheson. Ros, good morning. I have to wonder whether these are just another of President Trump's threats that he'll later pull back on. What's the legal basis for these new tariffs?
Well, that's right. That's probably the big question that will inform the Canadian response, is to wait and see, is this indeed something that the US will follow through on? Because there's also this talk about potential tariffs because of Canadian wildfire smoke, which has been blowing across the US. But this is being done, according to the US, under a section of the 1930 Tariff Act. And this would allow the US president to impose duties of up to 50% for countries that they say are discriminating against the US. And this is not an act or a provision that's been used before in this fashion. So it is untested also in that space. But it shows how much the US administration is trying to rebuild the tariff regime of Donald Trump using any and all mechanisms possible. And it does raise those questions again about, is this untested and what might it mean in the court of law as well if it does get enacted, and will indeed the US administration proceed, but it comes against that backdrop of uncertainty about the overall trade agreement between not just the US and Canada, but the US, Canada and Mexico, which the US has said it's not going to extend, and that's setting up years potentially of contentious negotiations. It puts that deal on a rolling basis only. So certainly the sense from the US, they're trying to keep that pressure up on Canada on a whole kind of different array of ways when it comes to the trade relationship.
And Mark Carney's not going to like this tariff on hockey goods, is he? What's been the response from Mark Carney?
Well, Mark Carney's used to these tension points right now because there's been so many under the latest Trump administration, and the friction particularly between the US and Canada. So you can imagine them probably taking a pause on this. Of course, they wouldn't like it, but it would represent a pretty small percentage of the overall trade relationship, the bilateral trade relationship between the US and Canada. So that might be a factor in Canada's thinking. Also, again, is the potential for the US to reverse course before it takes place. And you can see that really in the response so far from Mark Carney, which is to say, in his perspective, Canada has simply matched what he calls unilateral US actions against Canada. He says at the same time, we proposed a bunch of solutions to these trade tensions, and we're very willing to keep talking about those. So keeping the door open to negotiations. And certainly from the Canadian perspective, they've been here before a number of times. Sometimes they've followed through from the US, sometimes they haven't. So they perhaps just want to sit back and see, is this going to play out the way that the US says it will? And they've got 30 days to find out.
OK, Ros, thank you very much. That's Bloomberg's Ros Matheson. And coming up on the programme, we're going to turn to another aspect of trade tensions. This after the French president has warned that Europe is facing an aggressive trade war. This one from China. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, a delegation from the European Parliament is heading to China for talks expected to be dominated by these growing tensions over trade. The visit comes after the French president warned that Europe's facing an aggressive trade war from China. Let's get more now with our Bloomberg Chief Europe correspondent, Oliver Crook. Ollie, joining us from Brussels. Just give us the perspective where you are. How bad is the situation for Europe?
It's getting to a point, I think, where people cannot ignore it anymore. And you've had some willingness to ignore it, particularly from the Germans, because the relationship economically between Germany and China has been so important. But that is sort of dwindling away. So there are a few categories of activity that the Europeans are now putting into focus. Of course, the main one is just the general trade balance. This is something that we've heard repeatedly from the Europeans. But they can't put just that into relief, right? Because that is exactly the sort of basis upon which the United States has been upset with the European Union, because they have an imbalance in terms of trades of goods. But you see it on the screen there, the relationship between the EU and China. You've only seen that deficit between the EU and China really blow out over the last couple of years. But the real criticism that the EU has towards the Chinese is not just that trade balance, it's the way in which it has been achieved. And again, we hear about the trade subsidies that the state gives to the Chinese enterprises back at home, and that sort of unfairness in that trading system. But it's something that the Europeans have really been basically unable to address. There's also been some comments recently, more and more from Friedrich Merz, someone who has not been quite as hawkish, talking about monetary policy in China and the artificially depressed value of the yuan. So these are conversations that are getting louder and louder. And just, Lizzie, to illustrate kind of the scale of this and how much it's hurting the Europeans, you look at the trade deficit, the trading relationship between the Europeans and China. That's about 900 billion euros. The trade deficit now between the EU and China is 360 billion euros. So we're talking about a deficit that is effectively $1 billion a day. The uncomfortable part, I think, for the Europeans is that, yes, part of it is because the Chinese are subsidizing their companies. Yes, some of it is about the unfair side of things. But the Chinese have just been very, very effective at dominating a lot of the industries that have been very important to the Europeans, and a lot of the industries of tomorrow, whether it's solar panels, whether it's batteries, and of course the all-important electric vehicles, which has been one of the main concerns for the Europeans. And that is one place where they did manage to get some action. You'll remember they did put some tariffs on some of those EVs coming from China, but that is not sort of dissipating their influence. You can see them obviously more and more on the streets, and that is a trend you're going to continue to see here in Europe.
Well, yeah, what else can the EU actually really do? Can they club together to do something, or is the whole exercise just going to be another display of weakness between the bloc?
Well, that's the big question, Lizzie. I mean, there are a lot of things that they can theoretically do. The question is, what will they actually do? But as we've been reporting actually in the last couple of weeks and months, it seems that the Germans now are slightly shifting their tone in terms of willingness to potentially look at the Chinese threat a little bit more actively. I mean, we have Emmanuel Macron. He's spoken often very aggressively and very sort of more hawkishly about the threat that's posed by China. But it's a little bit easier for him to do that because his country is not as dependent on China. That being said, Lizzie, I mean, we're talking about that trade deficit between the EU and China. The trade deficit between just Germany and China is $90 billion. If you go back to 2019, so just before the pandemic, right before the sort of normal period was in this sort of before this new paradigm, that was $14 billion. So that is something that the Germans cannot ignore anymore. So what they could do is, of course, if they look at additional sort of tariff measures. But the main problem, Lizzie, as ever, is yes, there's a question of political consensus, but it's also about moving fast. Even when the Europeans decided they needed to do something about EVs, it took them a full year to do their investigation and to put those in place. When Joe Biden wanted to do it, he basically came out, he said, listen, we're putting in 100% tariffs, and that's just the way it's going to be. And of course, the other thing that everyone is sensitive to, Lizzie, not just the Europeans, is the stranglehold that the Chinese have on critical raw materials, the stranglehold they have on some of the companies, and that's going to be sort of weighing in the balance. So listen, you have that parliamentary delegation in China today. I don't expect a whole lot from that, but it's really going to be down to the leader levels, how much pain they're willing to exert in order to get that rebalance with that relationship with China.
OK, really helpful charts there. Ollie, thank you so much for your reporting. That's our Bloomberg Chief Europe correspondent, Oliver Crook, out of Brussels. Now let's turn to some other top stories we're following for you around the world this morning. The EU has fined Alibaba's e-commerce service a record €550 million for failing to adequately police illegal, unsafe and counterfeit products on the platform. The European Commission says AliExpress did not do enough to remove repeat offenders or to enforce its own penalties. Alibaba says it's surprised by what it calls a disproportionate fine and is planning to appeal. Elsewhere, we'll be keeping an eye on Swatch at the Open after the Swiss watchmaker reported earnings that missed estimates by quite some margin. First half operating profit came in at 52 million Swiss francs versus expectations of more than 131 million. Swatch has blamed negative currency effects and the fact that it had maintained jobs without cutting pay for reduced hours. And the US Defense Secretary Pete Hegseth is set to testify before lawmakers for the first time in more than 2 months to defend the Trump administration's request for billions of dollars in additional money for the Iran war. Hegseth is also expected to address growing scepticism among lawmakers about the course of the conflict and to face questions about the apparent collapse of the US ceasefire with Iran. And staying in the US, a group of 12 US states have sued Paramount Skydance, seeking to block its $110 billion bid to buy Warner Brothers. The antitrust lawsuit alleges that the deal would harm competition for film distribution, and Paramount Skydance says it'll defend the transaction in court. Well, those are some of our top stories from around the world. But next up, we're going to zoom in on the UK. We'll have a look at what to expect from Andy Burnham's new top team with politics professor Tim Bale. That conversation coming up next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burnham with your top stories. The US launches another wave of strikes on Iran as President Trump vows to make Tehran pay for the deaths of US troops. But oil holds steady as mediators continue to seek de-escalation. A surprise choice for UK Chancellor as former Defense Secretary John Healey heads for the Treasury, the new government pledging more support for the cost of living. And expectations for increased defence spending take centre stage at the Farnborough Air Show. We'll be speaking to industry leaders throughout the day. A very good morning if you are just joining us. It is Tuesday, it is 6:30 a.m. here in London, and we've got politics, geopolitics and tariff news all in the mix today. But for stocks, the focus is very much on tech. The MSCI Asia Pacific Index up 2.3%, boosted by the likes of the Kospi, up 3.5% now. So that's pairing some of its earlier gains. But these are the first gains for Asian stocks as a whole in 4 days as investors buy back into chips. That is feeding over to the stateside picture. Futures up 0.4% for S&P E-minis, up 1% almost for Nasdaq futures. But here in Europe, of course, we have less exposure to tech. So Europe soft 50 futures are down 0.2% currently, so looking for a lower start. FTSE futures also down 0.7% as things stand. Flip across asset, we can perhaps see why. We've got Brent down 0.7% at $88 a barrel. Of course, the UK exposed to the energy names, but that was giving support perhaps to broader stocks this morning. We had seen a 2-day gain as traders weigh the Middle East outlook, but Brent here trading at $88.60 the barrel. Goldman says it could top 120 if the Hormuz disruptions persist. Yields on the 10-year pretty steady at 4.58, and we're also, of course, keeping a firm eye on UK assets this morning. $1.34 is where we trade right now on the pound. We haven't seen much reaction to that news that we brought to you earlier on in the hour, which is that the UK government's going to remove VAT from electricity bills from October the 1st. Of course, we're waiting for more announcements on the cost of living out of the UK government, the new UK government, later on today. And we'll dive into all of that again in just a moment. Time now, though, for your front page news, and we'll kick off, shall we, with the Financial Times. It leads on Andy Burnham's surprise decision to appoint John Healey as Chancellor. The paper saying that his appointment may come with a hefty price tag, given his demands to spend 3% of GDP on defence. And you'll remember that the FT had reported Shabana Mahmood was the front-runner to become the Chancellor. So a big surprise there for Westminster and the markets. But meanwhile, if we look over to the Telegraph, they say that Burnham's pinning his hopes on Chancellor Healey and that his return to Cabinet has been welcomed by military chiefs as well. Let's also flip over to the Wall Street Journal. It reports on warnings from top executives from OpenAI and Anthropic about cheap AI models from China. But you can get a roundup of all the stories you need to know to get your day going, as ever, in today's edition of Daybreak. And that newsletter is available to terminal subscribers at DAYB Go. Now turning back to the UK, Andy Burnham has named former Defense Secretary John Healey, as we say, as the Chancellor of the Exchequer. And speaking outside 10 Downing Street, the new Prime Minister pledged more changes are to come.
We will make this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model.
Let's get some analysis now. We can speak to Tim Bale, Professor of Politics at Queen Mary University of London. Tim, always good to have you on the programme, so thanks so much for joining us early. What do you make of John Healey as Chancellor? Is he a safe pair of hands? Were you surprised?
I think I was surprised, like most people, but I think you're right to suggest that he is the ultimate safe pair of hands. It's an interesting one, given that he resigned from Starmer's government over the defence budget. It's clear that as Chancellor, he will have to make more room to fund that if he is to keep up with what he wanted when he was Defence Secretary. He is someone who commands a degree of respect right across the party from left to right. Which is important. I think he is, on the same page economically and indeed ideologically as Andy Burnham. And obviously a Prime Minister and a Chancellor have to work together in harness. So I think that's a good move. And also in some ways, he's not that familiar a face to people who don't pay that much attention to politics. And given that Andy Burnham needs to signal a big break with the previous Starmer administration, appointing someone who isn't that familiar to people and who resigned from the Starmer government strikes me as a good way of symbolising that break.
Yeah, I've interviewed him a few times. He's definitely a veteran, someone who gets on with the job quietly. I'd agree with that. I wonder, given that he obviously is going to have to find the money to pay for defence spending, given, as you say, that's what he quit over, does it bode well for the UK relationship with Trump under Burnham?
Whether you can ever spend as much as Donald Trump would like you to spend on defence, I think, is a moot point. I mean, clearly, it's already been the case that the Prime Minister has phoned President Trump. So presumably that is the start of the attempt to calm and charm the US president. Whether that will work and whether John Healey as Chancellor and spending more money on defence will actually help that relationship, I think is anyone's guess, to be honest. This is someone in the White House who is so erratic and so difficult to please that one wonders whether any country can do enough for him.
Yeah, Trump invited to Manchester. We'll see when that date is put in the diary. But look, just speaking of the cabinet appointments, there seem to have been a lot of jobs for Northerners, people that have been in close geographical proximity to Andy Burnham when he was Mayor of Manchester. Are we starting already to see the factionalism that Burnham said he would get rid of?
I'm not so sure that is the case. I mean, you are right to say that many of the people appointed are from the north, but I'm not sure that most people in the UK will make up their mind about the government based on the accents of the people who are there. I think it will come down more to whether they can actually deliver, to be honest. And I think, when you look at that, if you look at the fact that Yvette Cooper has moved from one of the great offices of state, the Foreign Office, to health. That in some ways is a demotion, but it also, I think, speaks to the fact that the National Health Service, improvements in the National Health Service and getting health spending right is going to be absolutely crucial to Labour's chances of re-election.
Do you think that Burnham really gets how sensitive the bond vigilantes are? Already yesterday, he provoked the bond market with those comments about finding flexibility within the fiscal rules.
Listen, I think Burnham, like many economists friendly to the Labour Party, realise that the bond market is a constraint. But I think they also realise that as far as the bond market is concerned, the key thing is really that spending doesn't get out of control and that it is also matched by attempts to raise additional revenue in order to match it so the government doesn't have to borrow too much in the first place. He has hinted, and he did so in his speech on the steps of Downing Street, and also in an interview he gave to another media outlet, that he's thinking of raising taxes, or he may have to raise taxes in the kind of medium term. I think as long as the government actually funds its spending, then probably, and I'm not a bond market vigilante, probably the bond markets will be reasonably satisfied with that.
Well, can he get away with that politically?
Yeah, I mean, I think it depends on how he structures any increase in taxation. Clearly, he's not going to go for the classic income tax or VAT. He's not going, I think, to pile more taxes on employers because that's seen as counterproductive for growth. He might go for some wealth taxes, and there is some room for that, although it shouldn't be too dramatic. So I think politically he can sell that to people, but it does depend on whether the money he raises actually looks as if it's improving services which people rely on in their everyday lives, and the NHS is the most obvious one of those. So any money that he raises has to be seen as improving people's lives. And I think the announcement this morning of a cut to VAT on people's electricity bills is a good example of that, because he is able to say he's using the money from getting rid of the digital ID card initiative to fund the reduction in VAT. So in some ways, as long as what he does is balanced by something else, then politically that will seem to make sense to most voters.
OK, Tim, really appreciate your analysis this morning. That's Tim Bale, Professor of Politics at Queen Mary University of London. Now, the UK Prime Minister has fuelled speculation about a bigger increase in military spending, as we've been discussing, with that new Chancellor pick. And it comes as UK government bonds dropped after Burnham unnerved investors on his first day in the job over his approach to the country's finances. So let's get more now with Matt Bunny, UK economist for Bloomberg Economics, and also Tim Craighead, Research Director here at Bloomberg Intelligence. Morning to you both. Matt, I'm going to start with you. What do you read into Burnham picking the ex-Defence Secretary as Chancellor? Is more Defence Secretary really going to help grow the economy when we already know it doesn't have as high a multiplier effect as other fiscal levers that he could pull?
So the pick of Healey was a surprise to markets. Expectations had really coalesced around Shabana Mahmood. And we don't actually know a great deal about John Healey's position on economic policy. I mean, beyond the fact that he's likely to push for higher defence spending. So what does this all mean? We know he's likely to stick to the same set of fiscal rules that we saw under Rachel Reeves. So there's not a huge amount of wiggle room there. And in terms of the actual levers he can pull, this is an important question for markets now is, will defence spending crowd out other potentially more fruitful spending that will boost growth by more? So they really have a tightrope to walk here in terms of delivering on growth as well as delivering on Burnham's policy priorities.
Well, Tim, we had Burnham telling the NATO Secretary General Mark Rutte that Healey's appointment as Chancellor was a signal of his intent on defence. I wonder how much impact that could have on defence stocks at the open, the likes of BAE Systems and indeed beyond today, longer term.
Yeah, it's pretty interesting. If you think back a couple of weeks ago, the Defence Investment Program, the DIP, was announced and it was underfunded. That was the issue with him.
That's why he quit. Yeah.
Exactly. And that was targeted at 2.6% of GDP in a couple of years. That takes the UK, if that were to stand, to far behind several other European countries. So, we would expect to see something better. A couple of things that go into this from the standpoint of the defense stocks. Number one, BAE is certainly in the focus here. They are a prime contractor on several programs that should be playing into the defense budget, whether it's submarines, whether it's the new sixth-generation fighter. There's a couple of, ships that feed into the program. This is all good news if there's more money to be spent. I think the key thing, though, and it goes on to the larger European defense establishment, is can this government, along with those in the continent, actually start to coordinate and collaborate more to get more bang for the buck? And can they spend more money within the European region? Certainly, if that happens, BAE is a prime beneficiary. If they're only buying more kit and they're getting it from U.S. defense primes, that's not helpful. And that's the issue about the lack of a multiplier effect. If it can be steered here, that's a good thing.
That's certainly a point that Healey had been making as Defence Secretary, that you should try and keep it at home. Interesting to see JP Morgan seeing Babcock as a potential winner here because it's had a year-to-date sell-off. Also noting Kinetic as an enabler, in their words, of new technology deployment. Matt, I want to come back come to you on a point that Tim Bale was discussing. Andy Burnham talking about finding flexibility within the fiscal rules. Is there any?
So by committing to the fiscal rules that Rachel Reeves had in operation, as well as Labor's manifesto commitment on tax, there's not a great deal of wiggle room for Burnham and Healey, but there is some. So effectively, because of the definition of debt under the current fiscal rules, Burnham and Healey will be able to boost lending via public corporations to help support investment. I guess the caveat here is that there needs to be credible guardrails for markets in order to not receive this negatively. So they're going to want to see a growth dividend from that lending. And indeed, the market jitters we saw yesterday in response to Burnham's comments that he will be seeking flexibility within the fiscal rules really underscores that Burnham and Healey are going to have to earn credibility in the eyes of markets.
Well, we saw rate-sensitive sectors like the home builders falling yesterday, even though Burnham says he wants to do lots on house building. Tim, this is another interesting sector as the Burnham government pans out. Is there a longer-term upside for housing stocks?
We would certainly hope so, but it seems to be emphasizing the word longer term. Mm-hmm. We actually have two negative focus ideas on the housing-related sector right now. One is Taylor Wimpey, one is Travis Perkins. Different elements, one's a builder, one's a supplier, but it all feeds into the issue of the current housing market, housing activity is quite weak, and we think disappointments are ahead. And a lot of it boils down to where interest rates currently are. It'll be interesting to see if there are policies to spur activity, if there's policies, there's discussion about what happens with the wealth tax, what happens with local property tax, things along those lines that might spur activity back into the marketplace.
Yeah, and these cost of living measures, the impact on inflation as well. Tim, really great to get your analysis. Yours too, Matt. Matt Bunny, UK economist for Bloomberg Economics, and Tim Craighead, Research Director at Bloomberg Intelligence. Thank you both very much. Well, coming up, we'll stay on that subject of defence, very much in focus at the Farnborough Air Show. We'll be going live there next. This is Bloomberg.
We still see a very strong demand for our products. We have a backlog of more than 9,200 aircraft, and we continue to get fresh orders for our short distance aircraft, for the long range aircraft. The Middle East crisis is actually fueling some demand because price of oil is very high and fuel efficient aircraft are in more demand.
The Airbus CEO Guillaume Faury speaking to Bloomberg's Guy Johnson at the Farnborough International Air Show. And we can go now to Guy, who's still in Farnborough for us. So, Guy, good morning. What else did Guillaume Faury say to you?
So the big question here at this show, Lizzie, is one that nobody really knows the answer to yet, and that is, when does Guillaume Faury and Kelly Ortberg over at Boeing make a decision on when the next aircraft program is going to start? He was talking there about the significant order book he has, particularly for narrow-body aircraft, the A320, which Airbus makes. That's something that I think at the moment he's very proud of and is a huge anchor for Airbus. But at some point, that aircraft is going to become too old, and he is going to have to make a decision on when he launches a new version of that aircraft. It's even more pressing for Boeing, but Boeing are pushing it later into the decade, next decade, as to when they're going to make that decision. They have to get the finances in order. So the kind of the question everybody's asking themselves here at Farnborough is, when does that decision get made, and what does the next generation of aircraft actually look like? Will it look like kind of the aircraft that we're all used to right now, traditional jet engines, or will it be a radical departure? And this debate is becoming increasingly live, and it's a huge bet for Boeing and Airbus. It is a huge bet in terms of the balance sheet for investors as to what they're going to do here. They have to commit huge amounts of capital to this decision. This is the workhorse of the global aviation fleet, so they've got to get it right. They've got to get the timing right. The customers have got to want it. Passengers have got to be comfortable with the next generation of airplane. But that debate really has started for the first time, I think, here at this show, and it's going to be one that really, I think, investors watch very carefully over the next few years, Lizzie.
And fascinating that you've got to speak to both of those companies while you've been on the ground there, Guy. I also have to ask you what the word on the street is about Healey, John Healey, moving from defence to the Treasury.
Well, it came quite late yesterday, so most people here probably would have only absorbed that information quite late in the day. I'm talking to Leonardo, the CEO of Leonardo, very, very shortly, one of the big European defence companies. I'm definitely going to get his take on what this decision is likely to mean, whether or not the UK is prepared to increase the commitment to defence spending. Healey wanted 3 and then 3.5. The Treasury only wanted 2.7% of GDP. Are we going to see a benefit coming through, not only for UK defence companies? You mentioned Babcock earlier on. You were talking about BAE Systems, but the wider European defence ecosystem, I think, is going to be watching this decision very carefully. A strong commitment from the UK on defence spending will certainly go down very well. But it's not just the money, it's the need and the desire to coordinate. Will the UK work with others? Will it coordinate with others? Will it enhance that process of working with not only UK defence companies but a whole range of European defence companies and making that kind of, as you were saying earlier, getting that bigger bang for the buck? So it's not just about the money, it's about that kind of political commitment, that industrial commitment to make this work.
Guy, thanks so much for your reporting. That's Bloomberg Guy Johnson at the Farnborough Air Show. And Guy will have plenty more conversations throughout the day with industry leaders, including, as he says, the CEOs of Leonardo as well as GE Aerospace. Stay with us for more on Daybreak Europe. This is Bloomberg.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
No lectern, no notes. That was the new UK Prime Minister Andy Burnham speaking after taking office yesterday. And here has been the gilt market reaction. More to do with his comments on finding flexibility within the fiscal rules than to do with his appointment of John Healey, ex-Defense Secretary, as Chancellor of the Exchequer, as we have been discussing throughout the programme. But of course, we're going to get the zone flooded by policy announcements over the next 10 days, starting with announcements on the cost of living today. So we could continue to see nervousness in this gilt market. Flip the board over. And of course, the cost of living is largely to do with external factors, oil prices. And this just shows how much the traffic through the Strait of Hormuz has been slowing because of the escalating tensions between the US and Iran. I'm sure they'll discuss that next on the opening trade. Anna and Tom will take you all the way to the open. This is Bloomberg.